Right, let's talk about Nvidia, the company that used to just make your video games look pretty. Now they're basically the puppet master behind this whole AI circus. It's like finding out the guy who sold you a really good graphics card for Doom Eternal is also incidentally building Skynet in his garage. And the truly wild part, they seem almost surprised by their own world domination. One minute they're all about ray tracing in Cyberpunk 2077, the next they're the indispensable engine of a technological revolution. Suddenly, Nvidia's GPUs weren't just for rendering Lara Croft's latest adventure. They were the bedrock of machine learning, deep learning, and probably somewhere, a learning algorithm, trying to figure out why humans enjoy reality television. And so, here we are in 2025, where Nvidia's earnings calls are treated with the same breathless anticipation as a papal conclave. What a world. Now, before Nvidia became the all-powerful Oz of AI, they had a, shall we say, slightly less world-altering ambition, making your computer games look absolutely fantastic. Founded way back in 1993, Nvidia, led by Jensen Huang, Chris Malachowski, and Curtis Preem, decided the world needed better graphics, and they weren't wrong. Early 3D games looked like a collection of angry, pointy polygons. Nvidia wanted smooth, immersive, wow. That explosion looks almost real graphics. Their big break came with the Riva TNT and then the GeForce 256 in 1999, which they marketed as the world's first GPU. This wasn't just about making pixels prettier. It was about offloading the heavy graphics work from the computer's main brain, the CPU, to a specialized chip. This focus on parallel processing, making lots of calculations simultaneously, was key. It was perfect for graphics, and as it turned out, for something much, much bigger. All right, let's dive into the numbers, the juicy bits that make Wall Street analysts either cheer like they've won the lottery or weep silently into their Bloomberg terminals. Nvidia's Q1 fiscal year 2025 earnings, which just dropped yesterday, May 28, 2025, were in true Nvidia fashion a bit of a mixed bag of awesome and oops. First, the awesome revenue hit a staggering $44.1 billion. That's billion with a B. It's a 69% increase from the same time last year. Analysts were expecting around $43.3 billion. So Nvidia just casually strolled past that like it was nothing. Cue the confetti, right? Well, hold your horses, because here comes the oops part. Adjusted earnings per share, EPS, came in at 81 cents, missing the Wall Street expectation of 93 cents. Why the miss? That brings us to a recurring character in Nvidia's recent drama China and a little chip called the H20. Apparently not being able to sell one of your fancy new chips to a rather large country can put a bit of a dent in your profits. Despite this EPS hiccup, Nvidia's stock actually climbed over 4 to 5% in after-hours trading. The company's data center segment, which is where all the AI magic and money happens, pulled in an astronomical $39.1 billion. That's up from $22.5 billion a year ago. It's a beautiful, terrifying, and incredibly profitable cycle. Now, about that H20 chip and the rather large dragon-shaped elephant in the room, China. The US government has been playing a game of export control whack-a-mole with advanced AI chips. Nvidia's H20 chip, designed to comply with previous US restrictions for the Chinese market, still ended up on the naughty list. The financial fallout from this H20 embargo has been significant. In this latest Q1 report, Nvidia had to take a $4.5 billion inventory write-down. On top of that, they lost out on $2.5 billion in revenue in Q1 because they couldn't ship these H20 chips. Nvidia is bracing for an additional $8 billion loss in H20 sales in the upcoming second quarter. CEO Jensen Huang has been pretty blunt. He stated there's currently no easy fix to get the H20 chips into China. These latest rules came after a Chinese firm, DeepSeek, showed off some impressive AI models using Nvidia chips. The real kicker is that China represents an estimated $50 billion market for AI accelerators. Huang even criticized these US policies at the recent Computex trade show, arguing they mainly benefit China's own efforts to develop domestic AI chip makers. It's a high-stakes drama with billions on the line. Section 5, Jensen's jiu-jitsu dodging bands and wooing wallets. So faced with this multi-billion-dollar China-shaped hole in their revenue, what's a leather-jacketed CEO to do? Well, if you're Jensen Huang, you apparently engage in some high-tech corporate jiu-jitsu. While the H20 situation is a gut punch, Huang highlighted 4 positive surprises that are helping to cushion the blow. First, there's just a relentless surging demand for AI chips everywhere else in the world, partly driven by the development of reasoning AI. Second, in a delightful twist of bureaucratic irony, the Trump administration actually rescinded a different set of export controls, the Biden administration's AI diffusion rule. New export requirements are, of course, planned for the future. The third surprise cushioning the China blow is the growing hunger for AI agents at the enterprise level. Companies are apparently clamoring for these, and they all need powerful chips to run on. And fourth, Huang is bullish on industrial AI. He believes AI will be a part of every factory globally. So while China is a setback, the rest of the world seems eager to pick up the slack. If China won't buy, there are plenty of other nations eager to join the AI party. Section 6, Riding the Bull, Dodging the Bear, Nvidia's stock market saga. Let's talk about Nvidia's stock, ticker symbol NVDA. For years, it was a tech darling, a growth stock poster child. Then, with the AI boom, it went from darling to unstoppable juggernaut that eats other stocks for breakfast. The performance has been nothing short of meteoric. We're talking about a company that saw its revenue grow 126% in fiscal 2024 and then another 114% in fiscal 2025. However, even rockets eventually need to refuel, or at least enter a stable orbit. Analysts are now projecting growth rates of a still very impressive 53% for fiscal 2026 and a more normalized 24% for fiscal 2027. Despite the China H20 kerfuffle and the slight EPS miss in Q1, the stock, as we saw, popped up. Investors seem to be looking past the immediate headwinds and focusing on the bigger picture, the insatiable global demand for AI infrastructure. Section 7. So, are we all doomed to serve our Nvidia overlords, analyst hot takes? With Nvidia basically becoming the central nervous system of the AI revolution, it's worth asking, what do the people who stare at spreadsheets for a living think, the market analysts? Regarding the H20 chip ban and its impact on China's sales, the mood is generally one of grim acceptance. Morgan Stanley's Joseph Moore put it bluntly, there is simply no offset to this H20 loss. But then you have the other side of the coin. Ben Reitzes from Melius Research pointed out that if you strip out the expected $8 billion H20 revenue loss for Q2, Nvidia is actually doing better than expected. This suggests the underlying business, ex-China drama, is still firing on all cylinders. Then there's the commentary on Nvidia's new best friends in the Middle East. The deal to supply hundreds of thousands of GPUs to Humain, the Saudi-backed AI startup, got Wall Street buzzing. This helps diversify Nvidia's customer base and tap into new pools of capital eager to invest in national AI infrastructure. Section 8, the future's so bright, I gotta wear Nvidia-powered shades. So what does the future hold for Nvidia, our accidental AI overlords? If you listen to Jensen Huang, the future is basically a giant Nvidia-powered theme park where AI does everything from designing your next car to running the factories that build it. He talks about AI inference token generation surging tenfold in just 1 year, and more thinking means more demand for Nvidia's chips. The company is clearly not resting on its laurels or its massive piles of cash. The Blackwell chip family is just starting to ramp up, promising even more computational horsepower for the AI data centers of tomorrow. They're pushing into new areas like industrial AI, enterprise AI agents, and even more sophisticated cloud offerings. And countries around the world are waking up to the idea that AI isn't just a cool tech trend, it's essential national infrastructure. Of course, it won't all be smooth sailing. Geopolitical tensions aren't going away, but for now, Nvidia remains the undisputed king of the AI hill.